Welcome to module number 12, where we are going to explore the termination benefits that the company is going to pay their employees upon the time of the termination. Termination benefits are those benefits that will be paid and provided to the employees as a result of an entity's decision to terminate the employee before the normal retirement date of that employee. So these benefits can include the severance pay, early retirement incentives, and any other termination-related payments. IAS number 19 require entities to record an expense and a liability for these termination benefits only when the recognition criteria are met. So what are these recognition criteria? The first criteria is the entity is committed to either terminating the employment of current employee according to a detailed formal plan without the possibility of withdrawal. Exactly like communicating this plan to the employees. These are the list of the employees that will leave in 10 days from now. So now there is a formal plan communicated to all of the employees. Once this formal plan communicated to the employees, this will create a liability and obligation on the company side to pay these termination benefits. So this is the first situation where the company must record expense and the liability and recognize this type of benefits. The second situation that the company is going to discuss with employees, okay, to give them some extra benefit in order to encourage employees to accept the voluntary redundancy and accept this termination. So these are the two situations where entities are required to record expense and liability in their financial records for this type of benefits. Let's take an example. Assume ABC Corp decided to implement a restructuring plan that includes the termination of 50 employees. The plan here specifies the amount of the payment that each employee is going to receive, and ABC Corp will recognize the liability and expense for this type of termination benefits. Why? Because the company communicated this termination plan to the employees who are being affected, that they are going to leave within 2 weeks, for example. So in this case, the expense and the liability all must be recorded. So what will be the journal entry here? The debit side will be the expense account, but the expense name will be termination benefit expense, and the credit side will be the termination benefit liability. So as you see, this entry records the expense and establishes a liability for these termination benefits. The measurement basis of the termination benefits involve estimating the amount that the company expects to pay to the employees for the severance pay, early retirement incentives, and other termination-related payments. So as an example, let's assume, continuing with the previous example, ABC Corp estimated that the total cost of the severance pay for 50 terminated employees will be $500,000. So in this case, the measurement is based on the detailed plan, taking into account the number of employees and the agreed upon severance amounts. Again, the entry will be debit the termination benefits expense and the credit the termination benefits liability with the same value, $500,000. Now, the question here is, should we do discounting for this amount? So in most of the cases, these payments will be done in the current reporting period, which means that within 12 months, even from the reporting date, which means that discounting in most of the cases will not be required. But in very few cases, which I don't think that it might happen in practice, that the company is going to pay these termination benefits after 12 months. So in this case, the company must discount this future cash outflow. But careful, this is a very rare situation. Now, when it comes to the disclosure requirement for the termination benefits, entities must provide disclosures in their financial statements about what? About number one, the nature of the termination benefits. Number two, the amount of the termination benefits. So this includes information about categories of the employees receiving the benefits, the cost recognized during the period, and any other significant uncertainties regarding determination. So as an example for this disclosure requirement, ABC Corp will include the following as disclosure: a breakdown of the termination benefits by category, severance pay, early retirement, incentive, so any type of payment the employee will receive from the company. And another type of disclosure that the company must provide related to the number of employees expected to receive the termination benefits. And finally, the total cost recognized for termination benefits during the reporting period. So as you see, it is very important for entities to accurately account for the termination benefits and make the required disclosure, because this will provide a clear understanding of the financial impact of the entity's restructuring activities and the commitments made to the employees. Now, let's summarize. In this module, we discussed how to recognize and measure the termination benefits and what are the factors and or variables that we need to consider when it comes to calculating the amount of the termination benefits. And we also discussed the disclosures necessary to provide the transparency about the nature and amount of these termination benefits.